All righty. Doc here from North America. Good morning, good afternoon, and good evening. It's Wednesday. Whoop, there's knock that off. The commercial. Chaba. There we go. And so here we go again. Another day of trying to figure it out. And today is a Fed day. That means the masters of the universe there. The Federal Reserve is going to they're going to start figuring out what they want to figure out, how they're going to fight the inflation situation. There was a really good statement this morning I heard out of many different things that have been said, and that was that the Federal Reserve is not going to throw away 62 years of credibility for the stimulus situation. In other words, they're going to start fighting inflation. In other words, they're not going to just walk away, and that is probably more than anything else is what we're really looking for here is them to show that they actually care, which is really weird. But anyhow, I mean, when you've gone from 800 billion, is it 800? Yeah, $800 billion on a balance sheet, their portfolio, to 9 trillion that they admit to, that's a big jump in 13 years. So, after since 1913. It took all the way to 1913 to 2008 to have a portfolio of $8 billion, $800 billion, 800 billion, not a trillion, 200 billion under a trillion. And now in just 13 years, they've multiplied by 10. They've grown 10 times bigger, not 10%, but 10 times bigger. So there's that question mark of what have you done for me lately, Federal Reserve, besides just flood the world with capital and wreck price discovery and so forth and so on. I guess they think they've saved the world somehow or another. I myself find that I don't see them saving anything at this point. I thought they did a fine job in the first couple of years, and that was it. That's all it was supposed to be from there. But somehow or another, free money, you put politicians together with free money and they get really, really crazy. So anyhow, that's where we stand this morning. We are, waiting for the Fed to do its thing. We're thinking that the way it's going to play out is that the Fed will, they're going to keep on, adding more money to the system, but they're going to raise rates. I don't see any particular reason why they need to lower their bond, their portfolio position down. That I don't see any particular reason for. As far as I can tell, the most logical thing for them to do is raise rates and talk about how they're going to reduce the portfolio. But that was really what it was all about to begin with. In other words, the idea was for them to buy all these bad, companies and their assets. In other words, they were buying all these assets, the ones they couldn't merge, and some that they had to merge, but at the same time buy their bonds at the same time. That was the objective, is for them to build this big portfolio, let the economy grow, and then slowly leak it out. But they haven't gotten to the completion yet. They're still buying bad assets, storing them away in that big giant portfolio they have, and that's why it's 10 times bigger than what it was just 13 years ago. And then at the same time, I guess now it's 2022, and it happened in 2008, so it's going on 14 years now. So they build this bigger portfolio, it sits there. I see no reason why they need to liquidate it at this point, because the objective was to hold on to it until they could grow out of it. And but they're still growing it. That's the odd part, is they're still growing it. So in other words, like this month, they're going to plow in about $105 billion into the portfolio again. They're going to add more to it. So, when you look at what we're trying to understand, what moves the currencies, let's put the Swiss up there. Swiss, you can see it there. It's trying to show strength here, which is not exactly what we were thinking it wanted to do. We thought they were going to go sideways down. We've been looking for that sideways down action. Instead, what we're seeing some strength in here. We got into that weekly sell here, and it went down. excuse me, went down, and then jumped into a buy here for that little hump. Goes back into the sell for a few days, and then boom, right back into the daily buy again. And we're wondering, what's that all about? Well, we'll see how the Fed acts today. What they do. Do they, they're supposed. What everybody's anticipating is they're going to announce that they're going to raise rates in March. And we talked about this yesterday. There are some that believe that they could be raising rates very soon over the next couple of days, and then there are some that believe they'll do it in March. And so I guess they're trying to do it in an orderly fashion where there's no guessing, where everybody feels, not confused. And in the end, what will happen is that markets will be calm, and rates will go up. I mean, we're not talking about a lot right now. I just saw the 30-year trading at 2.12. No, it's not exactly explosive. I mean, they could easily bring it up to 3.5. And actually prove with the 7% inflation that they're going to try to begin to fight it. I mean, obviously, this is not the end of the fight. This is literally we're waiting for the fight to begin. The fight hasn't even actually begun yet. That's the weirder part. And markets seem to be ahead of the curve. They're perking up. The interest rate is moving up. It went from about 1.7 to 2.12, 2.12, and the 10-year has gone from the 1.38 to 1.42 up to the 1.73, 1.72, that type of thing. So, it's not, we're really not seeing the beginning yet of this battle, the Federal Reserve fighting inflation. That's what we're waiting for. Now we're seeing the firmness in the metals complex. We're seeing silver try to perk up a little bit. Gold is trying to lift up a little. We're seeing copper lifting up a little bit, but we're not really seeing that fight begin yet. So we'll see how it plays out over the next 24 hours and go from there. Now let's see what our math is basically saying. You can see here, currencies are not, the pair trades, which we thought would start to anticipate raising rates in their own home countries, would make the dollar a little bit weaker and their currency pairs a little bit firmer. But so far it's not really doing it. I mean, it is and it isn't. When you look at the euro here, you can see that it's taking the wrong direction. And when we go over and we take a look at the euro itself against the dollar, you can see the same thing is going on in the wrong direction. It's not really happening. You can see that it's been peeling down. But notice it's not exactly breaking too bad. It's down to the lows, but they're not devastating the product, and that's the good thing. Now, over on Chicago Quant, you can see, where's it at? Right there. You can see, we're playing with that weekly sell, and that could get popped back up again. The Fed is going to start making their announcement. They're going to make some type of announcement of what they're thinking, and we'll go from there. But that's what the big challenge is that we're really looking for the fight to begin. And that's what has not happened. We're not seeing this fight against inflation start yet. Still hasn't started. And we're looking at the 10-year yield in the States at 1.79, I think it is, at the moment as we speak. So it's moved up from the 1.39 to the 1.79. But the Fed has still not done anything. We haven't seen official rates move. We saw England move them. And that's probably why when we look over at the cable, let's go over to the cable now. Right there. We see that the cable, at least, is not flirting with its weekly sell yet. It's holding off on that. Let's put that up there. Right there. See it? It's looking, matter of fact, the green line, which was a little piercing the time manifold right there over the last couple of days, is perking its head up a little bit there, which is interesting. And you can see the histogram is lifting up, and which is saying, okay, they raised their rates last month on the anticipation that the Fed would do it, and they did. And I guess now what we're really waiting for is the Fed to raise rates, and then see if England joins in again, or they wait for a little bit. I myself think they're going to wait. They'll probably wait since they've done the one jump already. And interest rates are not that high to begin with outside the United States. They're all mostly minus. So just a little raise to flat would be good. Just show us that you have some logical decision-making process there where it actually goes there. It looks like Boeing came out with some earnings. One of the big airplane manufacturers came out something like 15. It was 14.8 versus estimated at 16.6. So it's a couple $1 billion off. But the markets overall are very firm this morning. So we're not really seeing there was no financial guidance or anything like that leading into it. All right. Let's see. Do we have any questions this morning? Let's see if we have any questions. Let's go over to the chat line. I see nothing there so far. All right. And so that's where we stand, basically. And you can see the three major stock indices, currency pairs do their thing, kind of make that, that look like, okay, we're waiting, but it hasn't happened yet. And that's pretty much where we stand. All right, from there, we jump over to the Turkish Lira, one of the great success stories of the end of 2021 and showing the first month of success in 2022. Let's see now, right there, there's the dollar Turkish Lira. Let's put it up over here in Chicago. Right there. There you go. See, I went into a daily buy there a couple of days, but again, the movement is not that tenacious. You can see it's very chill. We're not exploding up and down. They've actually stabilized the currency with their new policy of free puts to anybody who buys the currency. And that is a pretty cool thing. You can see here the white line trying to move up, but again, very docile here on the J4X. The Euro Turkish Lira, right there, showing that same characteristic. Let's slide it over onto the Chicago Quant. TRY, there it is. You see, very chill, very relaxed. Interesting though, as you can see, is that this is the second week. Both of them are in weekly sells. The dollar-euro pair and the Turkish Lira one. Now I could see this particular product, the way it's been acting, with the way it's playing out, I would say that I think they've stabilized their currency. I mean, what real problem can they come up? I mean, remember for many years now with this hyperinflation, they've had to go find money. They ate up bank reserves out of the central bank. Then they swallowed up pretty much most of the money in the sovereign fund, and then from there they borrowed and they. And I hate to use the word falsified, but they did. They tricked the marketplace to think that there was more money around that they had stored to the side than they really did. But this plan, to me, is really good. I find this to be very, very successful, and I'm really happy to see it play out that way. All right. I think this could be a lesson for many, many other countries when they have hyperinflation and their currency is really going down the tubes and they can't get any investors to come in. They just give out free puts and guarantee that the investors won't lose money, which then loads capital into the country itself. At least that's the way I see it. So, all right, from there, where do we go from there? Let's go to the Canadian. There it is. Dollar Canadian. I just had to sip my tea. Thank you. Let's put it up on here too. I would think the Canadian is going down a little bit today. Yeah, there it is. It's going down because I saw oil up 65, 75 cents, something like that. Some firmness in the oil contract. So, and we're still in that weekly sell. We were thinking this might be just a simple hump, and then just like a camel's hump, and then kind of start to head south again. That's pretty much where we stand with the product at this point. And what that says about the rest of the marketplace is that actually we're seeing, strength in the oil complex. Matter of fact, I heard a very interesting story. Oh, there we go. Who we got there this morning? Hey, Kevin, how you doing? By the way, what's the maximum lots you can put in on that pair? You mean the Turkish Lira pairs? We follow the two. I imagine that they do all the majors. I would think so. I mean, obviously, Turkey's not going to turn down anybody from buying their currency, so I'm sure they're willing to do any pairs. Is that what you're suggesting? I'll wait for you to come back on that. But I would, yeah. I mean, I think I've seen yen, Turkish lira. Let's see if we can find that. Yen, Turkish lira. So it's like JP. Oh, let's do another local. GBP. Let's see if it has a Turkish lira. It must have a Turkish lira too. Let's see, /TRY. Let's see what that does. No, it doesn't do that. Okay, so there's no British pound Turkish lira. Let's see, how about JPY? I would think there'd be a Japanese one for Asia. So JPY /TRY. No, there's no Turkish lira one either. Interesting. GBP, for instance. So, yeah, I thought that there would be at least those two, or at least one of them. I can understand not having the cable as a Turkish lira. I can understand that. But, the British pound, I could see that because they're right next to Europe. They could buy, they were kind of part of the what do they call it, the ECB for a while. So that makes sense to me. But you would think, I could have sworn I saw, let's try it this way. Let's try TRYJPY. Let's see what that does. TRY and then /JPY. There's one. Okay, there we go. So there it is right there. There's the pairs. Let's see how that looks. See that it's flattened out there too. Well, Kevin, thank you. I'm doing okay. Can't complain. It's a Fed day, so it's one of those days where you kind of sit back and you wait for them to get their ideas out. They confirm what everybody's anticipating for like the last 5 weeks type of thing. Remember 5 weeks ago, we thought they were going to raise rates. They didn't. We thought they were going to show us that they cared. They were going to fight inflation, but they didn't, which was really odd, because that's what their job is. They're supposed to fight inflation. Now, stock markets this morning seem to be pretty firm out of it all. We're having a start of the day on the plus side. Nothing major. Bitcoin, if there's anything that's moving, some of the best action we're seeing is really coming out of Bitcoin, about 2.5%, 3%. So, no, we're doing all right. I can't complain. How about yourself? I hope everything's all well. What part of the world are you in? So we take a sip of our tea. While we're figuring that out, we will jump over to the oil sector just to confirm how the Canadian trade is going on. Right there, you can see that, and you're going to see a little more strength. Look at it, in the 86s now. So we may be up as much as $1. Let's see, right there, I'll put it up on the Chicago Quant to get an even better look at it. And there's the March contract up let's see, what is that? That is, where can we go from there? Right there. So you can see that strength that's in it right there. So yesterday it settled at 85, was that 60? Today's high is 54, 86.54. So it's almost $1 up for the day. And that's why we see the Canadian rolling over, you know, showing that strength there. We'll just point that out one more time. See it there? You know, with it moving down like that. And you can see the signal is, the gas line signal itself is trying to roll over and go into a sell. We've got a red dot there. And I think we had a red bar on, let's just see what it is again on J4X. Right there. Yeah, they're developing a red bar there too at the same time. South Africa, okay. Okay. I'm in contact with one physicist out of Cape Town. Don't talk too much about what's going on down there as much, but overall, just the physics stuff. All right, yeah, it's you're in the coming to the end of your summer, right? I think that's what's going on. You're in your, you know, it's last month of summer, I guess it would be. All right. So from there, we saw oil showing strength. Let's put it up on J4X again. Right there. You see that strength kicking up. See it bottoming in here with our Manhattan indicator thing going on. And which I need to send an email. I'm still trying to find out why on the other machine, which we got fixed, it shows a little different in cycle. So I'm still working on that. Once I get that figured out, what other indicator I put in there or changed or you know, average or whatever it is, we want to do that right, and then I'll send the email over to Janos. But they can easily put this together with no problem. You know, the hinkies and the slow and fast stochastic that we use here. All right. From there, we slide over to the metals complex real quick, just to take a look at gold. You can see gold's been looking very firm, heading for that 1850 area. Let's see what it looks like over here. I think we're in the daily buy. Yeah, we went to the daily buy, but we've been flirting with the sell just a little bit there today. But now we've got a green dot. We had a little red dot there going for a while. Let's just give it a 1 bar refresh. And you can see it's just minus by a little bit there. Minus 0.30. So we're just feeling a little pressure. But you can see the weekly is very firm here. I saw Goldman Sachs come out and suggest that, you know, you want to be basically involved in the physical gold. So right now they're giving a little recommendation. Usually anytime Goldman Sachs says buy, you want to sell. If they say sell, you want to buy. You got to figure that a lot of times they're talking their own book. Yeah. So you can see that gold looks like it's trying to firm up, but still it's down for the day. All right, from there we'll go over to the South African Rand. See that? We're coming right into your ballywick. We look at the South African Rand after we look at oil and gold. You know, just the Canadian oil gold situation. Then we go back to the metals complex after. When we see this type of action, normally we think, okay, you know, maybe the South African Rand will be sliding a little bit. Today's action, I would think it's sideways to down. Maybe, no, I guess sideways to up. Sideways to up. So let's go find it. There's ZAR. Oh, showing down. Good. It's joining back in again. Right there. I just saw it. There we go. There it is. Yeah, so it's moving back down again. We're in that weekly sell now for, was that 3, 4, 5? This is the 6th week. And looks like we're trying to go after these lows of about 4 days ago. We'll see if they do that. unfortunately, it's flirting with the plus side right there, just like it is doing on the J4X, right here. As you can see right there, it's doing it. And so it's doing it there, and it's doing it here. And the weekly itself is, showing the weakness, which is cool. We keep on thinking it wants to challenge this low, and here, somewhere between this low and this low, it'll play with. Maybe the high 14s, like 1484 or 85 or something like that. Let's see. Hey, Jordan, how you doing? Watching gold tonight. Yeah, I know. Goldman Sachs came out and recommended be long gold, which, like I said, I never, when they say something, you think they're talking their book more than anything else. Kevin says, am a scalper. I trade the 1 minute to 15 minute. Oh, okay. What's it in the South African Rand? Oh, mostly major pairs. Okay. Now, we're more of a spatial fan. We've done this before. We show you what like a 1 minute and a 15-minute look like in our work, and then you go and look at, like, say, a 1 Tesla, like a 369 or 396 type of thing, and next thing you know is, I think the full Tesla is 396. So you look at that, you see it a little bit. It's more accurate than the minutes situation. So we always recommend that we do have a strong opinion that we've seen success greater in spatial bars versus old-fashioned Newtonian 1 minute, 10 minute, or 3 minute, or 15 minute, or 1 hour. I think Kevin and Jordan, I think Jordan, Kevin, I think we've been having those discussions with Jordan and who else? Douglas, maybe? And a few others on the webinar here, where we look at the lack of continuity compared to the spatial bars. And if you want an example of it, we can do that. Just let us know you want to see an example of it, and we'll put it up there. We can show you what a 1 minute looks like in whatever currency you're following, and then we can put a 15-minute up there, and then we can put like a 1 Tesla in there, and you'll see the difference. See the more accuracy of the spatial bar versus the old-fashioned time bar, because it doesn't really represent the volatility or the action of a product. It's just giving you a deadline. Like, okay, wait, 60 seconds, and we're going to have a bar. It doesn't matter what that happens. Whereas when it's based on a spatial or amount of ticks or contracts, then it has a different characteristic altogether, a more accurate one. I would say yes. Yeah. I look at the Renko bars as a spatial, definitely. But not in an increment of 1 minute yeah, there's no doubt that it is. Let's see. I think we've discussed and we've taken apart the Renkos before. Let me explain that again. Let's see, where's it at? Right here. You find the Renko's bars. Renko bars are like Dorsey Wright. So they're taking X amount of ticks, and then it generates a bar. So in other words, a Renko chart is a type of chart developed like candlesticks by using price movement rather than both price and standard time. So yeah, that's what we're really talking about is basically price movement defining time. So in other words, you say, okay, you have 396 Renko ticks or contracts, make a bar. You use some of the, like I use the Teslas broken up in different pieces. I'll multiply it 3 times. Instead of 396, I'll, Tesla used to listen to the frequency of space. In other words, there's many things that broadcast on different frequencies, and space weather, I guess, or the space winds broadcast on 396. And he thought that was a magical number. And I guess in many ways, you really think about it, 1/3, 100% would be the 9 in many ways, and the 6 would be the 2/3. So it does almost match the Fibonacci. you know, where you have your 50 percentile, you have your, you know, 0.38, you have your 0.62, you know, that type of thing. And that's where he got, this is where he got his ideas from on that. And so it's definitely well worth. We've run across different numbers that have profound consistencies over the decades. Let's see, Kevin says, most major pairs, yes, would Renko, yes, Renko does. Let's see, Kevin says, yes, that would be great. I would appreciate that. Yeah, so let's take a look at it. We have one on here. We've used as an example before. Where's it at? There is the euro on a 9,369, okay? And I think we were trying to match up 1 hours for, I want to say Jordan or for or Douglas. I think that's who it was. And so you can see like each bar, like the bar there, 1431. Next bar is, I think it was a 2 hour. We were trying to find something that would match to fight the 2 hour. And you can see, goes into the cell here. And then what we'll do is we'll take the same product and look at a 2 hour. I think that's what we were doing. Yeah, there it is, 2 hour. So you can see there, it goes into the cell at 2000 on a 2 hour with our math. All right, and that's or I guess I would go more updated. So last night at midnight, basically, it goes into a cell right there. Now let's see what it did with the 9,000 and change. And pretty much the same situation, goes into a cell there and heads down. Now let's go back to the 2 hour again and see what the 2 hour has been doing. There's the 2 hour. You can see it's trying to curve up. Now we see the 2 hour trying to lift a little bit in here. You see back, was it on the 24th or on Monday, it went into the cell at 2000, you know, 4 hours before midnight. And let's take a look at the same situation on the 9,000. And so that went into a cell at 1915. Did we do it there? No. And 1915. Right there. And then it pops up for 1 bar at 4:30 in the morning, basically, on Monday. And it goes right back into the cell. And then on the 2 hour here, let's see, it goes into a buy at, it doesn't even pick up that strength at all that started to kick out, you know, where it goes up for like an hour and a half. It stays in the cell. And then it goes into the buy at 1400. In this case here on the 24th, it goes into the buy at where's that? Right there, 1339, and before that it goes plus at what is that, 1217? 1217? Yeah, 1217. So almost 2 hours earlier, it shows you that the strength is there already. So that's why we follow it that way. Now let's see if we can do what you're talking about, the 15-minute. Let's try this. On the euro, let's do this. Let's go with, let's see, let's try a 15-minute. And we're going to also do like a 369 or 396, the full Tesla. All right, and now let's go take a look at a 15-minute. So in this case here, you can see coming into today, It was strong from, I guess, midnight going into the European Open right there, and then finally goes into the sell right here at 145. Let's see what matches up to that for a 15-minute. 396 might be way too fast. Yeah, see, let's make it a double of that. So let's make it 693. Let's try something like that. 693. Matter of fact, let's try 936. Let's see if that matches up to it. Yeah, see, that matches up to it. That goes into the sell. Basically, what's that right there at 112, and then at 135. Again, it's in a sell. 135. And where was the 15-minute? 130, maybe 145 was it? I think it was 145. Where's 130 now? 145, yeah. So goes into the sell a little bit earlier. You can see this fluctuation right here, a little buy, and not even a buy. It's all on the sell for the 15-minute, all the way to right there. It goes into the buy finally, just recently. Now let's see how it does it on the 900. There we are. So it goes into the sell in here, goes into the sell there about 10 minutes earlier, stays in the sell all the way up into this point here. You get this fluctuation, and it goes back into the sell off of this big spike, actually. And then it's back down again until right there, off of that. Now it's in the buy also at 804. And let's go back to the 15-minute. $7.45 goes into buying, and it does have a profit in it, so it's not too bad. That beats it, and then it gets clocked though at the same time. As long as you do good money management, you made money out of that. And going back to the 9, puts you into the buy right there, and it's still kind of flirting around. It's still in the buy. So it puts you into the buy there, and it's still in the buy. I hope that helps you out a little bit. We just find them a little bit more accurate all the time. Rarely are they, in that case where you saw where it goes into the buy and then gets clocked, that's where the importance of good money management stops are. You have been looking at the daily chart with the Renko. It has added a different perspective. We'll continue with the Renko. Yeah. Yeah, I don't blame you. I think you should. I think you should. Because spatial definitely works better than the fixed time frames. What it really does, it represents the volatility. That's exactly what it does. It actually represents the action of the product itself. All right. Let's see, where did we leave off? We left off at the South African Rand. Let's see what the ruble's doing today. Oh, I know what I was starting to say too. At the same time, with the way oil is acting, to a great extent, there's a feeling starting to develop that Mr. Putin is just trying to push oil prices up more than anything else, and there won't be any conflict in the Ukraine. There'll just be lots of posturing, a lot of in other words, Putin would like to see $100 or $110 oil. And so, he puts a bunch of troops that have to sit somewhere along near the borders, but it's still in Russia, don't have to fire a shot, and they can, oil, since he's done this, oil's gone from $60 a barrel to $86 a barrel, and they're thinking that, he wants to see like $100 or $110 oil. And during the winter months, that's like the most opportunist of opportunities. In other words, people need it to heat and to generate temperatures that you can live in. So that is the wild recipe of it all in the end. We know that Mr. Putin might be just doing an economic thing at the moment. All right, from there, let's take a look at ruble. Let's see if ruble's moving down a little bit. It seems like it's been very firm of late. You know, it just keeps on trying to lift up. And there it is right there. You can see it's kind of just trapped towards the highs of the last I don't know, last year and a half or something like that. I think it is. I think we're looking. No, you know what we're really looking at? I think we're looking at the highs. The ruble's in the highs of the last 10 years, I guess it is. So, or not 10 years, but the Crimea, since the beginning of the Crimea situation in 15 or 16. So it's about 5 or 6 year highs. And so maybe that's really what all this noise is about. And he's not going to go to war, and he's not going to, you know, there's not going to be a conflict on the continent since 1945 type of thing, you know, with the Russians and the United States and the rest of Europe. And so we're probably watching is just an economic thing at the moment. That's probably what it is. All right, from there we'll go over to the yen, right there. And the yen is doing the same thing in many ways. It's flirting with a 5-year high. When we look at it here on the Chicago quant, right there, you see we are flirting with the weekly sell very softly. It's right underneath it. You see the daily is trying to lift up today. And this is like a 5-year high right there. Seems like it's making higher lows. That has been the nature of it, you know, since we went into the weekly buy. Well, no, we went to weekly buy back in here in the 109 area. Then it went into a sell for a couple weeks, what, 5 weeks? 1, 2, 3, 4, 5 weeks. And then got back on its saddle again, and now it's fighting to try to stay into that weekly buy. We'll see how that goes out by the end of the week. But at this point in time, until, you know, we've been in a daily sell for, was that 4 days. Now it's flirting with the weekly, the daily buy number, and the weekly is flattening out. We were a little bit lower there yesterday, and the day before we were pushing down. Now we're heading towards the zero line again. All right. Now from there we go over to the Mexican peso. Right there. That keeps on showing some life on the upside. Right there. A little backing off here. You can see it. You can see it already on J4X there with the white line trying to pierce the dashed line. And in our case here, we're still in the buy. So we're holding up, but we're getting a red and green dot. So it's telling us there's a little weakness there. At the same time, also, you can see right there, we are literally, plot 1 is 0.00. So it's flirting with the weekly buy again after going into the sell here. Not sure what goes on that situation in the sense of, you know, what are they, why did that currency make that jump after being stable for like a year and a half? All you can say is Mr. Biden and the Prime Minister of Canada and the President of Mexico got together, and the next thing you know, the currency went flying. So we have no idea what they said or what they're planning on, but one thing is for sure is that it wasn't a good thing, that's for sure, because the currency went flying up against the dollar. All right, now from there, we go back over to the metals complex. We see what's going on. We'll take a look at silver. Right there. As you can see, silver is trying to lift up today after a couple of days in a sell. You see it's holding up on our weekly buy in the Chicago quant. And you can see over here, right, where's that? Right there. You know, the pressure's still on it on the downside. Let's see if it turns up over the next hour or two. I would assume so. As long as Chicago is moving up, this will catch up with it. And overall, it's not, you know, the product has gone from, what is that? That is, it climbed all the way up to 24.75 basically, and is now trading just underneath 24. Got down to 23.60, so it dropped over $1. But it's still holding up pretty firm with that weekly buy, and that was one heck of a push. You know, ran up to there, and we got this big weakness on, what was that? That was Friday? Yeah, Friday. Where's the 22nd? Now, why don't we see a bar there? I'm a little confused where the bar got to. Oh, I guess it went into a sell here, but I don't see the bar on here. So the sell is, could it be it? Let me just see here. There's the 21st, 22nd. Is it 22nd? No, the 22nd was Saturday. That's what that is. Okay, 22nd was Saturday. So on Friday and then Monday they gapped it down. And we'll see if they bring it back up now. That's what it seems like it's trying to do. Is it's trying to get back up. Let's see now. What else do we got to say about that? I guess that's about it at the moment. Heading over to the copper market. Let's see what they're doing with copper this morning. There's copper right there. And there it is right there. Flirting, making some positive action. Still in the weekly buy there. So they're not really giving this up at all. See all that strength there. So they keep on going down, making lows, and then lifting up and making higher lows too. All these have been higher lows. Now we get this thing going on the upside here, and maybe it'll take it up to the $5 area again. I'm not sure. You know, with the Fed talking about raising rates and, you know, economy going sideways at the moment, and, you know, the fundamentals are not really there anymore where you would say, okay, that's a poor reason to want to see copper, you know, believe that copper is going up. At the same token, with 7% inflation, you would assume that, again, that would be the reason why it does go up. But fundamentals don't seem to have much validity or accuracy anymore. We don't see that with the fundamentals. You know, we don't see those mechanics anymore. So really changes the whole atmosphere of trying to use logic and past history when it comes to the way the markets have interpreted what they should do or what they're going to do because of inflation or CPI or PPI or all that other stuff. So, all right, from there we take a quick look at, let's see, what is it? We did gold, silver, and copper. Let's take a look at platinum over on the Chicago Quant. That seemed to be the leader of this action to begin with. Right there, April platinum. And look at that, it's lifting pretty firm after sliding into a sell here on Friday. And you can see it's in the weekly for 3, 4, this is the 5th week. So they're reaching for this more. And that could be a 3-month high, maybe? What is that? That is November, going after November numbers. I went up to 1,100 on November. And I think that we were really surprised that it didn't come out of that. You know, June was the last time it was past, it was 1150 actually, I guess it was. And no, early July had gotten up to 1116. All right. So from there, we go over to the energy complex. Let's see. Now there, we looked at the front month there. You can see it very firm and see what the high is now. Oh, they've lifted it up even more. Remember the high was 60. Now it's 96. So it's trading just 2 cents at 94, 93, 94. So they're still lifting the energy sector there. Take a look at it right here. Whoop. Let's see what Brent is doing. Here's Brent right there doing the same thing, making new highs. And let's see what the back month looks like. The June contract in the spring is discounted. They've got a contango going on there, right there. And there's June. You can see it's trading at 83.42. Still at a high. Took out the 2-day high, and it's one of the higher points we've seen that product trade since what is that? November. The highs in November were no, it's beating all that out too. So, being in the 80s, we're seeing some real high values there. It hasn't been that high in probably a year and a half. So we're seeing some real strength in there. Not since that great slide. I guess it's 2 years now. Ever since the COVID started in February, we saw the markets really collapse in oil to the point where oil went minus. And that you could literally, someone would pay you to take a contract of oil, and they were paying as high as like $39 at one point throughout that trading day. That was wild and fun to watch. Let's take a look at the natural gas. First, we'll look at the U.S. natural gas, which is making a nice big spiking move. I know we're supposed to get some, we're breaking cold records here in the United States and other places in the world. So I know that's definitely starting to freak some stuff out, or freak some people out, because they keep on trying to tell us that there's a global warming when, in fact, we're going into an ice age. But that's another story for another day. You can see here they are making a big spike in the natural gas. We've been in a buy for 3 days now. This is the third day. But we've been in a weekly sell since basically late October, since this $6 area. And then that's the U.S. oil, natural gas, that is. And then when we look at it in the European market, which is trading 10 times more in value, which is a monster number. You see it's there, it's trading at 27.89. So was it 10 times? Is it 10 times? 10 times 4 is 40. Okay, so it's more like about 7 times. 7 times 4 is 28. So it's 7 times more in value. So it's trading at 27.89 compared to our 4.3, $4.30 versus almost 28 euros compared to $4. Big difference. And that is the natural gas marketplace at this point. And you can see it's way down. This is a good thing, that pressure on it compared to what we're seeing with the U.S. Let's go back to the U.S. on here on J4X. Gas. Is that a gas? Yeah, that's it right there. Yeah, it's turned up. So it's nice to see European markets actually back off. I mean, I would love to see them get back down to the $6 or $7 area. That would help out a lot of people, I would assume. Make people feel a little bit more safer and warmer at a lower price. All right, where do we go from there? Okay, so that does the metals, and we've done the energies. So from there, we're going to slide over to the stock indices. See what's going on with the stock indices today. We'll put the Tech 100 in there. They're lifting them up compared to the last couple of days. There's Tech 100. You see it's turning up in the white line, so forth. Pinkies haven't shifted yet. Let's go over to Chicago Quant right there. You see we're cleanly launched through the buy number. You can see the weakness in the weekly still. We'll see how well it does about get going in here. And again, today is a Fed day, so I mean, if they raise rates, do they lift them up? Or are they lifting them up right now, like a relief rally? I don't know. You can never guesstimate what the motivation is until it's after the fact. We always try to figure out what the story is, but in the end, that story always seems to be fleeting, on its own in the end. But right now we're and I understand that fair value is basically right here. So in many ways, the way they closed it last night, we're really just, as much as it's up big, it did that last night, and we're playing at fair value And same thing with the S&P 500, up 69 points. Let's show you that. See, right there, there's the S&P 500. As much as it's up 69 points, or 70 points, something like that, fair value is basically right here. So in other words, you can't do the basket, you can't do the arbitrage, because it's at fair value. In other words, you can't just go in and buy the stocks right now and sell the futures contract thinking you're locking in a big profit. The fair value is like 69 or 68 and a half, something like that, right around there. And it's trading at 60, 68, as you can see on the screen there. Let's see if we can show you real quick. Let's go to the top, and we'll do this. Right there. And as you can see, it's up 72 points right now. So it's the fair value is 69. So it's just 3 points higher, really. As much as it's up 72 points in the contract. They did that last night, and so the markets need to catch up. Or actually, the markets are where they belong. They don't have to catch up. They are basically at where they want to be. And if it's trading 2 or 3 points over premium, so it'll lift the stocks up a little bit off the opening here, just a little bit more. All right, what else can we say? I guess that's about it. Just giving you a little heads up on the fair value. Sometimes people don't realize that, because of the electronic 24-hour market in the futures compared to the stocks, things get they look more active than they are sometimes. So the markets, Dow Jones Industrial Average is up like 400 points, and I think the fair value is like 360 or 370. So it's only up like $30. It's not really up as much in fair value, and that's fair value. If you're curious, how do you define the fair value? And it really comes down to the price of the interest rate with the dividends and of the basket of 30 stocks, say on the Dow 30, and so in other words, there's no benefit there. Now, obviously, if stocks were enormously lower, then it would be worth buying stocks and selling the futures contract, but it's not. So, just the way it is. All right, traders, we're out of here. We will catch you all tomorrow on Thursday. This is Doc from North America saying happy hump day. Happy trails to you until we meet again. Happy trails to you, to all our trading friends. Ta-ta, traders.